We are now halfway through 2024, and this year has completely shaken the prop firm industry. Starting earlier this year, many firms were no longer able to offer MetaTrader. Firms then restricted US clients, and amongst all of that chaos, a whole bunch of firms, in fact, some of the largest firms in the industry went under and had to close down. And this means it has been an absolutely wild year for traders. But the question is, how can traders navigate this situation? As we move into the second half of 2024, what is the prop firm industry looking like? How can traders navigate it, and how can they best prepare themselves? Because the reality is, traders just want one thing. They want reliability. They want to ensure that their hard work will be compensated and that they will earn payouts. And so in today's video, without naming any names, because again, we believe competition makes everyone better, we're going to go through some red flags that firms might be offering to help you best position yourself in the prop firm industry for the rest of 2024. Now, a quick warning, make sure you stay until the end of the video, because what we're about to share and discuss could save you a ton of money in both the short and long term. Okay, so the question is, how can a firm be sustainable? If there has been one takeaway from 2024, it is that firms must be sustainable, that these flashy rules that seem great on face value for traders simply do not work in the long term. For a firm to offer these payouts with rules that are so generous, they need to ensure that their revenue maintains and continues and is strong. But as we have seen, that is not a guarantee, and it will never be a guarantee. One dip in sales could lead to disaster, and that is exactly what we have seen happen to so many firms this year. So keeping in mind sustainability being the most important thing, how can we as traders know what firm is sustainable and what firm is not? Because clearly we want to be going and joining a firm that is sustainable. Well, I think there are a handful of things that first come to mind when it comes to sustainability. Rules that might be great for traders, but long-term could be questionable in terms of their sustainability. One thing is leverage. At Lark Funding, we do not offer the highest leverage. As a trader myself, I eventually realized that 100 to 1 leverage is just a marketing play. If you're a risk managed trader, 100 to 1 leverage is truly just a marketing stunt. You don't need that much leverage. 15 to 1, 30 to 1 max. I really don't think any trader needs more than 30 to 1 leverage if they are risk managed. So for a firm to be sustainable, offering huge amounts of leverage really makes it difficult to be sustainable, because traders will be able to take on massive lot sizes. They'll have huge swings, both in the negative, both in the positive, and that can be difficult to manage the risk on the firm's side. And so leverage is really something that needs to be kept an eye on. If a firm is offering 500 to 1 leverage, my personal opinion, stay away. It is a red flag. Even 100 to 1 leverage, I think, is very, very high. And so it's something that we need to consider as traders. We need to understand we don't need that much leverage. It's really a marketing play, but then also think about, okay, how is this actually working for the firm? Second, if you go back just a couple of years, when I first got funded with FTMO back in 2021, 30-day payouts were the standard. Once a month, you could earn a payout. But that has quickly shifted both in late 2023 and early 2024. 30-day payouts is no longer necessarily the standard. While many firms, including us on our two-step program, the first payout is after 30 days. After that first payout, the frequency tends to change. After your first payout on our two-step program, you can get a payout every 14 days. And this to us seems very reasonable. It's very sustainable. But anything beyond that could raise a question. Now, it's not an automatic assumption that it's unsustainable. We offer weekly payouts and have been doing so for roughly a year on our three-step program, and we have not had any issues whatsoever. However, the shift in payout frequency has gone to the extreme at some firms. Rather than offering 30, 14, 7-day payouts, there are some firms that are now offering daily payouts, which to me, seems a little bit crazy. Now, again, this is a feature that to traders seems fantastic. Who doesn't want to get paid every single day? But in terms of a firm being able to offer that long term, being able to offer that sustainably, that is a big, big question. Number 3, this one is absolutely huge, and I really think I'm so adamant about this that traders really need to pay attention to this. And it is the part of the fundamental problem that this industry has had in terms of being reliable and paying out their traders, and that is cheap challenges. They're very cheap challenges that seem too good to be true. We are talking about a $100,000 challenge for under $300, for $200, $250. I think very cheap challenges are a major red flag. And if there is, again, one thing that we can learn from 2024, it is that cheap challenges long-term are a major red flag. We have seen it time and time again. A prop firm will launch into the market with incredibly cheap challenges, easy rules. They'll try and gain market share only to shift their rules, shift their prices, or worst case scenario, deny payouts because they ran that pricing for too long. The reality is trading and prop firm challenges are just like everything in life. Quality is not cheap. There's a reason that the most reliable firms in the industry that have been around for years don't offer the cheapest challenges. If you're watching this, I would like you to take into consideration the fact that it doesn't matter if a challenge is cheap if the firm is not reliable and if they're not going to pay you out. Who cares what the price is if you're not going to receive that payout? Number 4, firms that work with flashy influencers that have questionable ethics, I think, is an under-discussed aspect of this industry that does need to be taken into consideration. We, for a brief period of time, had some influencer affiliates on Twitter, but for over 6 months, we have now removed all of those. The reality is, after working with traders, with influencers behind the scenes, 99% of them are fake. And so, while it would drive revenue and sales to us if we worked with these influencers, it puts a bad taste in our mouth because we can see on the back end that they're not actually they're not actually profitable. They're selling this dream, but we can see their data and they're not actually making money. And so I think firms that work with a ton of influencers, especially influencers that can be questionable in their ethics, I think is a bit of a red flag. Number 5, this is a big one. Any form of unprofessionalism from a firm, I think, needs to be taken into consideration. For example, firms and owners that get into fights on Twitter, I think, is just insane. I think it's insane that many firms will try and resolve their customer complaints on Twitter or on social media. I think it's just absolutely nuts. There's nothing else to say about it. It's just very unprofessional. And as a trader myself, I most certainly would never have wanted to join a firm where their owner was getting into fights online. I think it's crazy. And that can be extended to anything. So I think professionalism is really what the industry needs, and that's something that I'm paying attention to, and I think traders should as well. And number 6, I think the amalgamation of all of this is that if something is too good to be true long-term, it is. And we have seen that in 2024. Pricing, challenges, everything that seems too good to be true, eventually the hammer is going to fall, and that usually falls on traders. And so if something is too good to be true, it can be difficult to resist that temptation, but long term, that delayed gratification is going to pay massive dividends. So just keep that in mind. If it's too good to be true, probably is. I hope that these 6 things will help you navigate the prop industry as we move into 2024 and beyond. It has been an incredibly difficult year for both firms and traders, but fortunately we are very well positioned at Alark Funding, having been operating for over 2 years now with one of the best payout records in the industry. The only reason we do that is, or can do that, is because we are built for sustainability. When we launched in 2021, some traders complained about our pricing. Some traders complained about certain rules. The challenge wasn't easy enough. But the reality is we have done that for a reason, and we have now proven exactly what that reason is for. I think if you are a great trader, it doesn't matter what the rules are. You will always be able to navigate the situation. To focus on improving your trading, go with a quality firm, whether that's Alark Funding or someone else. We'd be happy to have you, and you'll be doing just fine. So stay safe out there. If you made it this far, we appreciate it. See you in the next one, and until then, peace.